Hi, my name is Richard Hutton and welcome to the Exponential Fund, the place where you learn to invest and absolutely crush average market returns. It is that time again for the quarterly report. But first, let's look at last week's volatility. So my strategy was up 1.91%, decent, whereas the S&P was up just 0.05%, basically flat. Now, obviously, these short-term movements are unpredictable, almost irrelevant, but hey, just checking up. So, to get the point, how did the strategy perform in the first quarter of this year? Bad. Down 14%. That is an ouch. Whereas the S&P was down just 5%. So, overall bearish sentiment, but really growth stocks have been punished. Now, if the thesis is correct that these large, fast-growing companies will continue to grow, let's say this is the average growth rate over many years. Well, if in the short term it's way below that trend, what does price have to do? Catch up. So if the last year was this bad, there's a chance that next year will be very good, make up for the loss. Not a guarantee, but hey. Also, because all of the companies reported the annual report for 2021. Some did it very fast in the first couple of weeks of January, and some companies just reported at the end of March. So I do wait to do this yearly rebalancing at the beginning of April. This is the one chance during the year when I add or take away stocks from the portfolio. So if you're new, a quick recap of the rules of my strategy is to invest long-term in big companies that grow fast. More specifically, I invest an equal amount in the 20 largest companies that have been growing their sales by at least 10% every year for the last 5 years. So, when the annual report comes out, I can check, hey, is this stock still growing fast, or is another stock, got into the top 20, bumping another stock down? And that is what happened. I sold 2 stocks, KLA Corporation and Workday, and added Block, formerly known as Square, and Snowflake. All right. Now, just some fun stats about this portfolio. The average sales growth of these 20 companies for last year is, watch this, 44%. That's insane. 42% would mean a doubling every 2 years. And this is slightly above that, so fucking nuts. The slowest growing stock in terms of revenue is Microsoft at only 17% per year. And the fastest growing is C Limited at 127%. Just astonishing. The smallest company is Vertex Pharmaceuticals at $66 billion in market cap. The largest company, obviously Microsoft, at 2.3 trillion. So the biggest company versus the smallest company is 34 times larger. Amazing. The average market cap of these 20 companies is $472 billion. And the total sum market cap of these 20 companies is 9.4 trillion. Just astonishing. Now, why do these stats matter? They do actually a lot. If I track them every year, I can see a trend. Now, the hypothesis is the law of accelerating returns. Ray Kurzweil really highlighted this in his book, The Singularity is Near, where he said, technology improves not just exponentially, but the actual rate of growth itself is growing exponentially. So that's like a double exponential. So not only do the computing power of PCs double every 2 years, but the time it takes to double is shrinking exponentially, right? Which means if I track this average sales growth and, okay, apply that in the real world, it means companies should be able to grow faster and faster. I don't have the stats, but if I were to have looked at these stats 50 years ago, I bet the top 20 largest companies that are growing fast were growing slower than 44%. I guess, just. So in time, in the future, this average sales growth could go up a lot. So, also, I'm very curious about the market cap, about the size of the opportunity. So, when I was studying personal development, I kept hearing this lesson over and over again to think big, right? And it does take some time for your psychology to be able to accept certain magnitude of goals. So when I started investing, when I was just 14 years old, the first book I read, it was hardcore strategy, but also half motivational, saying that even if you start with a small amount early and invest with compounded growth, eventually you will make millions. Like, holy shit, I will have millions of dollars. Amazing. And in time, I kept thinking, okay, what if this trend were to continue? Could I get to $1 billion? Holy shit. And then finally I was like, okay, let me not just stop pulling these arbitrary large numbers. What is the limit? What is the most that one could make in the market? I was like, okay, with this strategy, I made it so it's highly scalable. Specifically, I want this strategy to be able to manage a sum larger than the net worth of the richest person in the world. So currently, that's Elon Musk. I haven't looked it up. Let me look it up. Elon Musk net worth. What is it? 267 billion. Okay. This strategy can handle assets under management of more than that, because the total market cap of these companies is 9.4 trillion. But how much could you? Well, it is possible to buy 10% of a company on the stock market. So if I were to buy 10% of each of these 20 companies, I would have $940 billion. Practically $1 trillion. That's phenomenal. Now here's the trick. By the time I get to having $1 trillion in net worth, decades from now, by then, the sum of the market caps of the top 20 companies, I bet will be much larger, and could be surprisingly much larger because of this double exponential. So it could be 100 trillion. It could be a quadrillion dollars. It could, I have no fucking idea. And I know these numbers sound insane, but specifically what looks like will massively increase the world economy is the Tesla bot. Because that humanoid robot will be a general purpose worker, it will radically reduce the cost of labor and radically increase the supply of labor. And because it's run by AI, and AI is advancing rapidly, there's essentially no limit to the size of the economy. The size of the economy will only be limited by the total available energy. So if we were to build a Dyson sphere of solar panels around the sun to capture all of the energy, and then build a bunch of nuclear fusion reactors, the amount of energy available is just astronomical, and that will be the size of the economy. So the point is, this strategy, the exponential fund, I bet will be able to compound at great average returns for a very, very long time. And I'll be here to document it. And I'm sharing this because I want you guys to get rich as well. Let's get rich together, right? All right. That's it for today. Till next time.